Welcome back, fellow investors and finance enthusiasts. Today, we have something exciting to discuss that might just change the way you look at investing. We're diving deep into the financials of one of the most well-known companies in the food industry, KRAFT HEINZ. That's right, we're going to break down the numbers and give you all the juicy details about this company's performance. So, buckle up and let's get started. First up, let's talk about the price-to-earnings ratio. Currently, KRAFT HEINZ has a trailing 12-month PR of 18.43, which is higher than its average of 12.28 over the last 5 years. Looking forward, the forward PR stands at 12.03. This suggests that the company may be trading at a lower valuation compared to its current earnings, which could be a potential positive sign for investors. Next, we have the PG ratio, which is a crucial metric for evaluating growth potential. KRAFT HEINZ's PG ratio is 3.45, indicating that the stock might be overvalued concerning its expected earnings growth. Investors should keep a close eye on this, as it could be a factor affecting the company's future performance. Now, let's talk about profitability. KRAFT HEINZ has a return on equity of 5% and a return on assets of 2.7%. While these figures aren't exceptionally high, they still demonstrate that the company is generating a reasonable return on its shareholders' equity and assets. Moving on to earnings per share, the company has an EPS of 1.96. This metric shows us how much profit the company is making for each outstanding share of its stock. It's essential to keep an eye on EPS growth over time, as it indicates the company's ability to increase its profitability and reward shareholders. Looking into the future, analysts expect KRAFT HEINZ's EPS to grow at an average rate of 5.34% over the next 5 years. This projected growth is a positive sign for investors, indicating potential long-term profitability. If you're an income-focused investor, you'll love this part. KRAFT HEINZ currently boasts a dividend yield of 4.42%. But what is not as good as his dividend yield is that in the last 10 years the company's dividend has been growing at a moderately compound annual growth rate of 4.81%. This shows the company's commitment to returning value to its shareholders through regular dividend payments, but in the last 3 years there have been no increases in dividends. Now, let's take a look at KRAFT HEINZ's profit margins. The company has an operating margin of 14.1% and a profit margin of 9%. These figures indicate that the company is effectively managing its costs and expenses to generate a reasonable profit. Over the last 5 years, KRAFT HEINZ has maintained a stable level of profits and income without significant fluctuations. However, it's important to note that the market didn't respond positively during 2018 and 2019, resulting in a sharp fall in the company's stock price. Since then, the company has shown a stable performance, but it hasn't fully recovered its previous stock price. Looking at the stock's performance, the average price return of KRAFT HEINZ over the last 52 weeks is minus 2.77%. This indicates that the stock has experienced some volatility and might be an opportunity for investors who believe in the company's potential. Now, let's talk about what analysts are saying. On average, analysts predict that the price of KRAFT HEINZ will reach $42.97 in the next 12 months, representing an upside potential of 18.83% from its current price of $36.16. Moreover, based on my analysis, I believe the fair value of KRAFT HEINZ to be $42.65, which aligns closely with the analysts' predictions. There you have it, a comprehensive breakdown of KRAFT HEINZ's financial performance and projections. Remember, investing involves risk, and it's always essential to conduct thorough research and consult with a financial advisor before making any investment decisions. If you found this video informative, don't forget to hit that like button and share it with your fellow investors. Also, make sure to subscribe to our channel for more exciting insights into the world of finance and investing. Until next time, happy investing!